Asia and emerging markets hold great promise, but some of that narrative has changed recently given the political challenges between China and North America and Europe. So to understand how businesses are being impacted by this, we asked David O to join us. David is the head of Asia on TimesSquare's international equity team, and TimesSquare manages the Steadyhand Global Small Cap Equity Fund. David gets into some of the issues impacting the region today and also a few of the emerging market holdings in the fund. Now, this is part of a series of conversations we've had with TimesSquare on the issues you've told us are on your mind most. Asia, emerging markets, technology, Europe, and also how the fund is being positioned. So we hope you enjoy not just this conversation that is in this video, but some of these other conversations we've recorded for you. David, how are you?
I'm great. How about yourself?
I see it's a little hazy out back, but I have no sympathy for you because I've been to that conference room where you're sitting right now, and I know usually you can see some beautiful skyscrapers from where you are and even the Empire State Building. David, let's talk about China. It has such a big impact on the global economy. It's a large producer of goods for so many of us around the world, and yet it's experiencing some pretty interesting challenges these days. You've been covering the region for many years. You speak the language as well. And so take us through what your perspective is on China right now.
Sure. Well, China has just concluded its 20th National People's Congress, where Xi Jinping was confirmed for a third term, and a new slate of standing committee members were brought in to help him lead China. And while this wasn't a surprise, China still faces several challenges that are causing a lot of uncertainty for investors. Top of mind are China's strict zero COVID policy, which China looks to be sticking with despite its negative economic impact. And secondly, US and China geopolitical tensions, which unfortunately are also contributing to a lot of uncertainty as well. What is a bit different is that in prior years, the US looked to be targeting China's military. In this period, it looks like the US is looking to inhibit to the maximum extent possible China's innovation capability as well as its economic development. We think that this creates a lot more uncertainty for investors, and we don't see many of these challenges being able to resolve in a short period of time. And we find this unfortunate because China is home to a lot of innovative companies and management teams as well. So we think that for now, a cautious stance on China is warranted.
So let's get into the micro. How has that situation that you've just talked about impacted the Steadyhand Global Small Cap strategy?
We do not have any exposure to Chinese stocks, but we do monitor to the extent that companies might have exposure to China as a supplier or China as an end market for products.
So as you said, we don't hold any Chinese listed companies, but we do still have exposure to Asia in general, and that comes in the form of Japan. We've held a few more Japanese companies in the past than we do today. We still hold a couple, and you've talked about what interests you in the region, but maybe just take the viewers through, the holdings and what excites you about Japan right now.
So Japan's in an interesting situation because just like in various moments in the past, the COVID crisis as well as post-COVID situation is forcing Japan to change. We think that Japan has the potential to come out of the situation much stronger. For instance, COVID has made Japan realize that its companies are far behind on the digital transformation journey relative to developed and even developing market peers. As such, a lot of Japanese companies are making investments into this area, and we feel that this has the potential to help transform Japanese companies with regard to productivity as well as kickstart a lot of growth. From another dimension, the weekend as well as the need to ensure reliability of supply chains is also resulting in a capex, inbound capex boom for Japan as well. A lot of manufacturing capacity is being brought back onshore, and Japan is in a good position to benefit because it's got a very high quality workforce. It's known for its engineering expertise as well as factory automation. So Japan can actually use the weekend to its benefit, and as in addition to benefiting from the nearshoring theme. And finally, the weekend is encouraging tourism back into Japan, but it is also forcing the government to rethink energy security. We think that this likely results in the company restarting a lot of its idled nuclear power capacity, which in turn would supply relatively cheap baseload power to help power the manufacturing renaissance that we believe will happen in Japan. As such, we think that it's actually a quite exciting time to be looking at investment opportunities in Japan.
And one of the holdings in the portfolio is Internet Initiative Japan. Does that play into this theme that you've just mentioned?
Sure. Internet Initiative Japan was one of Japan's first internet service providers. As such, it got a foothold into both the government as well as many of Japan's top blue chip companies. From that position, Internet Initiative Japan leveraged that toehold into selling and upselling additional services. What started off as a direct internet connection, then morphed into additional IT services, then morphed into offering security services for a lot of that interconnection, and leveraged into, let's say, helping companies transition to the cloud. The company started off with one revenue stream and now has many, many times more than that, upselling to both the existing client base as well as several new clients. I think that the company is in a prime position to benefit from the digital transformation journey of Japan's corporates as these companies look to embark or proceed on their digital transformation journey.
Thanks for that. I want to talk a little bit about emerging markets right now because it's an area that you've had a lot of enthusiasm for. Today in our portfolio, we hold two Brazilian companies. We hold an Indian company. But emerging markets in general, David, I think it's fair to say, have not done well over the last, quite a few years now. It's been a difficult period, difficult 5 years for emerging market stocks. So what's different this time that makes you more interested and more excited?
Well, we're very enthusiastic about emerging markets, but particularly the emerging markets small cap asset class. We think that the small cap asset class allows us to see the rise of non-East Asian emerging markets. Previously, a lot of the EMs were dominated by China, Korea, and Taiwan. But in this case, we're starting to see a much more balanced view of EMs, meaning we're seeing a lot more Southeast Asia, a lot more India, and a lot more LATAM, which we think is much more representative of the growth and potential of the emerging markets as a whole. What is also different is that a lot of these EMs in the past might have been impacted by strong dollar as well as rising interest rates. But because of many of reforms they've undertaken or much more active fiscal and monetary policies, they've actually become much more resilient to a rising dollar and rising interest rates than they have in the past. And this has actually been a positive surprise for a lot of investors and market watchers as well. And finally, a lot of the EM small cap companies that we're seeing now are actually much better businesses than we might have seen, call it 15 years ago. Back then, we might have been looking at a cement company or something, a company that was a commoditized widget manufacturer. But now we're seeing companies that are either technology leaders or are able to use technology to build much better businesses than they were in the past. For instance, you might have a retailer that has an app that connects to 10 million customers, or you might have a domestic ERP player that has a massive share of the market and is out competing multinationals like SAP. One example of such a company is TOTUS. This is a Brazilian domestic ERP player with about roughly 50% market share in Brazilian ERP. This company is led by a very ambitious and capable management team. And what they've been doing is, in addition to selling a market-leading ERP solution, they've also been upselling and cross-selling additional services, such as digital marketing services, as well as company financing solutions. We see a very bright future for TOTUS and believe that this is an example of the kind of company that we can find in the EM small cap asset class. All of this makes us very excited for EMs going forward.
David, thanks for doing this. We could talk for hours on this topic. It's really fascinating, but thanks for your time.
Absolutely. It's been a pleasure.